Welcome. Today, we're diving into the much-anticipated IPO of National Securities Depository Limited, NSDL. NSDL is the backbone of India's stock market, holding shares and securities in electronic form, enabling smooth and secure trading. As one of only two major depositories in India, NSDL's role is critical. Think of it as the infrastructure powering our financial markets. This IPO is a big deal because NSDL is a market infrastructure institution, not just another company. Investing in NSDL means investing in the growth of India's capital markets. The company first filed for this IPO in July 2023, and after a long regulatory journey, it's finally set to list in 2025. This IPO is an offer for sale. Existing shareholders like major banks and financial institutions are selling their stakes. For retail investors, it's a rare chance to own a piece of a stable duopoly business. NSDL's only major competitor is CDSL. As India's economy grows and more people invest, NSDL's business is poised to expand. The company's role is so vital, it's almost like a utility for the financial system. This IPO isn't just another listing, it's a landmark event for investors. We'll break down everything you need to know to make an informed decision. Stay tuned as we explore the timeline, structure, and what makes this IPO unique. Let's get started. The first thing investors want to know, when is the NSDL IPO? As of July 2025, the exact dates aren't out, but SEBI's approval means the IPO must launch by November 2025. Expect the IPO to open anytime between now and November. Watch financial news for updates. Here's the typical IPO process. The company announces the price band and dates about a week before opening. The IPO is open for 3 working days for bidding via your broker's app or website. After closing, the allotment date reveals if you got shares. Refunds follow for those who didn't. Allotted shares are credited to your demat account, likely with NSDL or CDSL. The listing date is when NSDL shares start trading on NSE and BSE. You can sell for listing gains or hold for the long term. The whole process, from opening to listing, usually takes 7-10 working days. Make sure your demat account and UPI ID are ready. Given the buzz, prepare in advance. We'll keep you updated as soon as dates are announced. Let's break down the offer. The NSDL IPO is a complete offer for sale, no new shares. Just existing shareholders selling about 5.73 crore shares. Sellers include IDBI Bank, SBI, Union Bank, and the National Stock Exchange. SEBI rules reserve up to 50% for institutional buyers, 15% for high net worth individuals, and at least 35% for retail investors. Any Indian with a PAN and demat account can apply under the retail category. Apply through your broker using UPI, choosing lots and price within the band. Given the expected demand, oversubscription is likely. Retail allotment is often by lottery. There may be a small employee quota, but details are pending. This structure ensures fair participation for all investor types. The IPO is a chance for retail investors to own a stake in a market leader. Let's look at how pricing is shaping up. IPO pricing is always a hot topic. The official price band isn't out yet, but the grey market gives early clues. The grey market premium, GMP, is the extra buyers pay over the expected issue price before listing. NSDL's GMP was strong for months, signaling high demand and hopes for big listing gains. Recently, though, the GMP has dropped as market sentiment cooled and IPO delays tested patience. This signals more moderate listing expectations. Remember, GMP is informal and volatile. Don't base your decisions solely on it. Focus on fundamentals and the official price band. The drop in GMP is a reminder to be cautious, not swayed by hype. NSDL's business remains strong, but explosive listing gains aren't guaranteed. Use GMP as a sentiment check, not an investment strategy. Let's see how NSDL's unlisted price history compares. To gauge fair value, let's review NSDL's unlisted share history. Over the past year, unlisted shares traded in a wide range, peaking at the equivalent of Rs 900 per share. The price to earnings, PE ratio based on these trades was around 35-40, reasonable for a stable market-leading company. The price to book, PB ratio, was also at a premium, reflecting NSDL's brand and regulatory position. Compared to its only listed peer, CDSL, NSDL's unlisted valuation is slightly lower. CDSL has historically traded at higher PE multiples. This could mean NSDL's IPO is attractively priced or that the market expects more from CDSL. As an investor, compare NSDL's final IPO price band with CDSL's current valuation. Use this comparison to judge if the IPO offers value. Now let's understand what NSDL actually does. NSDL is one of India's two central securities depositories. It holds stocks, bonds, and mutual funds in electronic form. No more paper certificates. Your demat account, managed by your broker, is ultimately linked to NSDL or CDSL. NSDL earns steady revenue from annual issuer charges, transaction fees, and services to brokers. Its business grows as more investors and companies enter the market. NSDL holds trillions in assets and manages millions of accounts, especially for large institutions. While CDSL has more accounts, NSDL leads in total asset value. Its duopoly status creates high barriers to entry. New competitors are unlikely. NSDL's revenues are tied to overall market activity, not individual stock performance. This makes it a stable, low-risk business for long-term investors. NSDL is a core pillar of India's financial infrastructure. Now, let's talk about what to watch before you apply. Before applying, here's your checklist. First, evaluate the official price band. Compare NSDL's PE and PB ratios with CDSL's. If NSDL is priced at a discount, it could be attractive if at a premium. Ask why. Watch the gray market premium for sentiment, but don't rely on it for your decision. Compare the IPO price with recent unlisted share prices. If it's much higher, be cautious. Consider the overall market mood, especially after the HDB Financial Services IPO. A strong HDB listing could boost confidence for NSDL. A weak one may dampen sentiment. NSDL's fundamentals are strong, but the market is cautious. Balance the company's stability with current sentiment and pricing. Don't get swept up in hype. Focus on long-term value. The NSDL IPO is a rare chance to own a piece of India's financial backbone. Make your decision based on facts, not just excitement. Good luck and invest wisely.